you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Welcome back to Real Estate Mindset. This video is going to be absolutely bonkers, and it's going to go into this new statistics on the rental market. One of the phenomena that we have, other than the massive price increases, is for one of the first times in history, rent is going down on a national average. And the good thing is, guys, is we're going to go into those stats, and that's basically demonstrating that there will be relief in 2024 as far as tenants. Now, the primary reason that is, guys, I'm just going to tell you up front, is the overwhelming amount of inventory. And specifically, the inventory is coming from new construction apartments. They're literally all over the place. So we're going to go into a Redfin article that has all of the updated information on exactly what's happening with the rental market. And then I'm going to end by accessing my own local housing market. I'm going to show you guys the MLS data, which is live data. So I don't have to wait 1 or 2 quarters to get rental data. I can actually access that data live. And I'm going to show you guys that there's an overwhelming, not only is there an overwhelming amount of inventory in my own housing market, but also the rent, again, in the housing market that I live in right now, the rent is probably down 20% right now in my housing market. I'm kid you not. And again, inventory from this time last year is probably 4 times more. So 4 times more inventory, and prices down, not on all listings, but on many, about 20%. You guys, homes are now going for under $1 a square foot in my area. So I'm really excited to show you guys that. But if you can, please like this video, shoot me a comment below, hit notifications, and share this. And again, you guys, hit like real quick. Definitely appreciate that. And again, I definitely appreciate your comments. But either way, let's get started. Now, first, we're going to go into this Redfin article. This just came out. Name of this article is A Reprieve for Renters. Costs drop for 3rd straight month in December. That is a beautiful, beautiful thing. Rising supply has led to rising vacancies, motivating landlords to lower asking rents, which fell 1%, unprecedented still, but they still fell 1% from a year earlier. Rents dropped in South and the West, but continued climbing in the Midwest and Northeast. So you really got to pay attention to what's going on in your own local housing market. Redfin can help with that. Now, the median asking rent fell 0.8% year over year in December to $19.64. That's the 3rd consecutive decline, following a 2.1% annual drop in November. That is a big November drop, which was the largest since 2020, and a 0.3% dip in October. Now, we can see that here for US asking rents. Now, when I first look at this, this looks a little bit seasonal, except the run up from the end of 2020 to the mid 2022. Obviously, this is what was not seasonal. Okay. But when it goes like, up a little bit, down a little bit, you can kind of see a little bit normal right there. It's a little bit seasonal. However, you guys, when we look at this chart, it allows us to see that the decline in rent is not seasonal. It actually has been going down. And this is a year over year percentage change. So when we look at the year over year percentage change on a month-to-month basis, we could see that the growth has been going down substantially. This is disinflation, okay? But when it hits under 0, that's the deflation. So this line here, this is disinflation. So rent's been going down, disinflating, which means it hasn't been going up as much. But middle of 2023, that's when we started having deflation in the rental market. So you can see that right here. It is still going down 0.8% year over year. That is an absolutely wonderful thing, because everyone knows shelter costs are way too much right now, literally runaway inflation in the rental market and in the housing market. Now, December rents were little change from the prior month, from 0.2%. The rental market has lost steam largely due to the jump in supply fueled by the building boom in recent years, especially in Denver. You guys, when I went out to Denver, I saw more apartment building than I have ever seen in a small area in my life. There was new apartment building all over the place in Denver. Really shocking. Literally, you guys, within 5 miles, I probably saw 2,000 brand new units. Crazy. That are not even done yet. They're not even completed construction yet. It's insane. That has left many landlords struggling to fill vacancies, motivating some of them to drop asking rents. Some landlords are also offering one-time concessions like a free month's rent or reducing parking costs to attract tenants. This means the prices renters are paying in total are likely coming down faster than what it appears in data. And again, you guys, that's why it's so helpful for me to show you guys MLS, because we don't have to wait on lagging data. The only problem is it's only applicable to my metro area. Other reasons rents have cooled include economic uncertainty, slowing household formation, and affordability challenges, as rents are still only 4.4% below, that's good, their record high. Additionally, there are new signs that the economy is slowing. Americans are starting to tighten their belts, which could contribute to declining rents. High supply more than low demand is driving rent declines. But if mortgage rates continue to drop at a fast clip in 2024, slowing rental demand could become a major driver of rent declines. That's because more Americans would ditch the rental market to become homeowners, leaving landlords with even more vacancies. But the problem is, guys, right now, depending on the data source in Metro, it's 60% more expensive to own. So I don't believe that. I mean, interest rates would have to go to 1%. I don't believe that. I think the rental market is continuing to get messed up until builders stop building. When they stop building, it will probably be a year and a half, 2 years of balancing out. But as long as these people are still building, the rental market is going to continue to plummet in price. There are more newly built and under construction apartments in the US than there were a year ago. And any time in history, by the way, literally any time in history. The number of completed apartments is near the highest level in more than 30 years. And the number under construction is just shy of its record high. Because renters have an increasing number of buildings to choose from, vacancies have climbed. The vacancy rate rose to 6.6% in the third quarter, the most recent period for which data is available, the highest level since the first quarter of 2021. Now you can see the vacancy right here. So 6.6 vacancy. Now that's about where we were at pre-COVID. So we need that to continue to accelerate. And look at what it was during the great financial crisis. I mean, it got up to 10%. I'm sorry, it got up to 11%. So we're not there yet, but we are seeing things decline, right? And this is, I'm talking about the price. But I also note that during the GFC, there wasn't nearly as much building of new construction apartments or investor demand and conversion as we have right now. So in other words, supply is exploding. It's exploding in every area of the housing market. Rents rise in the Midwest and Northeast, but they fall in the West and the South. And I've been to the West and South. It's completely different. I'm about to go to the East to do some boots on the ground intel. But anyways, this says the median asking rent rose 3.7% in the Midwest to $1,434, and they rose in the Northeast to $2,439 or 1.7%. Meanwhile, rents fell 1% in the South to $1,632 and declined 0.6% in the West to $2,346. Rents are likely holding up best in the Midwest and Northeast because those regions haven't been building as much as South and West, meaning some landlords have less incentive to drop prices because they're not dealing with as many vacancies or as much competition. With rents falling and vacancies rising, now is a good time to shop around or try to renegotiate your rent if your lease is up, especially if you're a renter in the South and the West. And before I access MLS, let me tell you what I'm doing with my own personal situation. Obviously, I'm in the South, I'm in Texas. The rental market in Houston right now is an absolute dumpster fire. So what I'm gonna do, like I always do every single year, is when it comes time to renew my lease, which by the way, it's already come time. I was supposed to renew my lease in December. My landlord we have not heard a peep. The reason why we haven't heard a peep from my landlord is she knows when she reaches out to try to get us to renew that I'm going to nickel and dime her like crazy. It's because the rental market is sinking. So what I'm going to do is I'm not going to renew yet because I'm looking for my primary residence. I'll look probably until about February, end of February, and hopefully I'll buy a house within the next couple of months. But what I'm going to do is before I renew, I'm going to talk her down. But not only am I going to talk her down, I'm going to supply her with data of other houses of similar size that show lower rent. You guys, the rent for the house I'm staying in right now is about $300 lower than what I'm actually paying right now, which represents a decline of about 12%. Again, I can find a bigger house, it's a bigger house than what I'm renting now for about 12 to 15% less than what I'm paying. And this all happened within about the last 6 months. So this is happening quickly. And I will add, we have had a recent spike in apartments being constructed in this area. We had 58 new listings come up in this area. Now, let me show you on the MLS exactly what I'm talking about. All right, guys, so here's how you do a rental analysis. It's basically the same thing as how to do a market analysis for price on SFRs for sale, but this is just for rentals. So what I'm gonna do is let me show you the map. All right, so here's the map. I have to zoom in because there's obviously 5,000 results, and I wanna just show you guys Kingwood. There's 92 listings in Kingwood for rent and 72 homes for sale. So there's more homes that are under, for rent than actually for sale. Now here's the Kingwood area, and you're gonna see a few things going on right here that I wanna point out. Now the first thing is you guys see this 58 right here? So, and again, this is the local market I've been watching. This 58 represents 58 new apartment units, you guys. There's 58. So there's a whole bunch of new, listings, literally doubled the amount of listings in Kingwood. So we have 58 new apartments right here. So that devastates all these other houses. Now, these houses are just normal existing SFRs. But what I want to point out also is up here, you see this little cluster right here? This is a build to rent community. So not only do mom and pop landlords, institutional investors for that matter, have to compete with apartments, they also have to compete with areas that are built to rent. And you can see there's about, looks like 7 or 8 homes available to rent. And I've done a video here. I did a video here actually last year. There's also right here, brand new building right here. I also did a video there. There's also brand new building down here. So there's a lot. And you guys remember, this is a very small market. Kingwood is a very small box, yet we have normal rentals. We have an abundance of brand new apartment rentals. We have townhouse rentals. We have build to own. So in other words, you guys, the market is getting absolutely saturated with inventory. And as a result of that, I can now, and I know it's the winter months, and in the winter months, you can usually find the best deal. But as a result of all that inventory, again, I could find a home that's bigger than this home to rent for 10 to 15% less than what I'm paying right now. And that's exactly what I'm going to do if I can't find my primary residence. And I don't know that I'm going to be able to, because again, you guys, I'm not going to settle. I'm willing to not have everything, but I'm definitely not willing to settle. So in other words, depending on your metro area, the rental market is an absolute dumpster fire that should be providing relief, not only for potential renters, but also for the housing market, because if rent's going down, what that will mean is there will be less investors wanting to invest in the housing market, which is exactly what we need. Because part of the reason for the increased prices like we have right now is because of the overwhelming amount of investor purchasing. Now, in conclusion, guys, I don't think this is the bottom. I think that rent will continue to go down in 2024 and into 2025. But really, I think that's going to start changing as far as rent going down. I think that starts changing when they stop building so much apartments. If they continue to build so much apartments or 5 units, townhouses, build to rent communities, if they keep doing that, then supply is only going to keep going up. And when you have metro areas like my metro area that is absolutely saturated, you're going to see rent decline. And you're going to see rent decline because they went up way too much in the span of 2 years. And it's hurting people. And so honestly, I think it would be smart for people to continue to move in with each other, move in with your family. And as you do that, save your money, improve your credit, and try to buy a house once it's time. But this is a great sign, you guys, because again, it's going to deter investors. And honestly, it will also probably allow us to have more inventory come to the market in the form as net sellers. So investors will become net sellers, which means if investors are not making as much money as they can, say, investing in the 5-year treasuries, they're going to sell their houses. And if they sell and liquidate their houses, that's good for us. And if they're in distress, they will also sell their houses. And we see these management companies start going under. Look no further than Front Desk, which is an STR company. Nevertheless, you guys, there's a lot happening right now in the housing market. I still think it's a wise idea to just time out, T-bill, and chill. And in the meantime, increase your purchasing power, your credit, your income, your assets. And the most important thing is you. Don't forget that. Empower yourself, understand the data, rebudget, and live a happy life. You don't have to be a homeowner to be a great person and to live the American dream. Although I do think that owning a house is a good thing, I just think right now it is a very, very bad idea. Now, other than that, guys, if you're out there investing in real estate, you know I wish you luck, and I hope you win.